What's going on, everyone? Welcome back to another video. This is going to be the first video in the series on everything you need to know about market structure. In this video, we're just going to really discuss what market structure is and how to identify points in structure, as well as when structure changes. Everything else that you need to know about structure will be in the following videos. So let's go ahead and get started. So as you know, the market doesn't just go up in one direction forever or down in one direction forever. It typically goes up, then comes down, then goes higher or lower than before, depending on which way the market is trending. And each one of these points has a specific name, so you know exactly where at in market structure you are. So really all market structure is just a fancy way of saying the market is still trending. And when market structure breaks is just a fancy way of saying when the trend is changing from either an uptrend to a downtrend or from a downtrend to an uptrend. And really the most important thing about structure that you need to know is how to identify these points so you know where at in structure you are. So if we're in an uptrend, every new high in market structure is considered a higher high because each high is higher than the previous one. So every single one of these highs is a new higher high. Now when price retraces and we come back down while still being in an uptrend, every single one of these lows is called a higher low because each low is higher than the previous one. Now once we get into a downtrend, all of these highs and lows have a similar name but are slightly different. So now we have lower highs when we are in a downtrend because each high is lower than the previous one. And each low has its own name as well. They are considered lower lows because each low is lower than the previous low. Pretty easy to follow, right? Now the reason why this is so important is because once we stop producing higher highs and higher lows, this is when we know that the market is changing into a downtrend. And if we're in a downtrend and we stop producing lower highs and lower lows, then we know that market is changing into an uptrend. And this is our first sign that we need to start looking for entries, but we're gonna save that for the next video. In this one, I just want you guys to get comfortable with identifying these points in the market. So we're gonna go ahead and look at a couple easy examples that I have saved right here. So as we can see right here with this example, the market is trending up. So what are we getting as the market trends up? We're getting higher highs and we're getting higher lows. And as the market trends up, we keep getting those higher highs and higher lows. Now, as you come to certain areas in the market, you'll notice that the market might start consolidating and hitting the same point many times over and over again. So you can consider each and every hit its own lower high, or you can consider it just a high or a low, like this right here. And that's really up to you, whatever makes the most sense to you and helps you stay within the market structure. For me, I just like to consider it a high or a low. So for me, everything just kind of hits the same area right here. So I would just consider this the last high. But if it works out for you to consider this all three separate higher highs and then two separate lower lows, you can look at it that way as well. But for me, I just like to consider it one high and one low just to keep things cleaner. And then as we know, we're supposed to create this low to push past this high to continue the trend, right? We're supposed to have a new higher high up here. That would let us know that the trend is still continuing upward, but we don't get that. We break beneath the previous low, so we know we are now in a downtrend and we are producing lower highs and lower lows. And then as the market continues, we keep getting more lower lows, lower highs. Whoops. Just like that. So really what you need to do is to be able to identify these little points in the market and then identify when that shifts and we go into the downtrend, because that's going to be crucial when you need to start looking for your entry. So let's go ahead and look at one more, or I guess two more. So we can see that we're in a downtrend right here. We're producing lower highs. Then right here we have a lower low. Then we get another lower high and a lower low. And then we hit this point in the market right here and here where we're basically producing the same exact thing, just the same high. So again, you can consider this both separate lower highs or just a high. Really up to you. And then the same thing goes with this. I don't know why I keep doing that. We get our lower lows or just a low in general. Now we know we're supposed to hit this area and either come back down to this low or go past it. Because if price just comes back down and bounces up, then we're really just consolidating between this high and low. But we notice that as we hit this high right here, price doesn't come all the way back down to this low. So we know that structure is breaking. So this would be our first higher low. And then as the market trends up, we would get a higher high. Like so, then a higher low right here. And then you'd get your next higher high up here, so on and so forth. So it's really important that you're able to identify when a market structure is shifting. So let's go ahead and look at one more. We were in a downtrend, or excuse me, we're in an uptrend. So let's go ahead and just label these. We have our low, or you can consider this two separate lower lows. Then we get the same thing right here, more lower lows, or you can just consider all of this just a low. Got your higher high, or you can consider this just a high, really up to you. Got the low, got another higher high. Get rid of that. Higher low. And then this is basically the same high, and we know we're either supposed to hit this same area right here and go higher, or it's going to break and change structure. And we can see that it hits this same higher low or low, and it just moves sideways, and it never comes back up to this previous high. So we know that price is stalling out and it's going to change. So this would be our first lower high. And then as price trends down, you start producing lower lows and more lower highs. So just go through the charts, see if you can identify your higher highs, your higher lows, your lower lows, and your lower highs, and figure out what makes more sense to you when you hit the same area over and over. If you just want to call it a low or a high, or if you want to call it, you know, 2 or 3 separate higher highs, so on and so forth. And just spend a day getting comfortable with identifying these areas and when the market's changing and why it's changing. You just need to figure out, when does the market shift? Is this the first higher low? Is this the first higher low? Is this the first higher low? Just get comfortable with figuring out when exactly the market is shifting. That way, when you come to the next video that I put out tomorrow, you'll understand why we're taking our entries, where we're taking them. So hopefully this helps. If you guys have any questions, please drop a comment below. With that being said, I will catch y'all in the next video.